Hello and welcome to the BBA Show. This is Adam Wyatt, also known as AKW Analytics, and as always, I'm here with our good friend Rich. How you doing today, Rich?
I'm doing great, Adam, but apparently Bitcoin's dead, so we should pack it up and find a new hobby, right?
That's right. Yeah, transfer-wise, this remittance company said it's dead, so we should all just go home.
Yep, we're done here. Thanks.
We're
Thanks,
done here.
everyone.
Right. Yeah, poor guy. I mean, the thing's rallied like $30 after he said that, so looking too smart right now.
Nope.
But that's a good lead into what has happened in Bitcoin. I mean, it's been a nice rally after we broke that 430 resistance level. The triangle everywhere pretty much broke up. If we zoom out here a little bit, well, you got to go even more, don't you? This thing was so huge. So if we go out to this 3-day chart, let me take the SMAs off here. They kind of mess up longer term, but boy, this thing was just creeping sideways. And in fact, there was lots of stories over the weekend, tweets and stuff on social media, and earlier this week about how Bitcoin is historically stable, right? I mean, so there was an article, I think, in the Wall Street Journal or one of the big ones about how for the first time ever, Bitcoin's like rolling 24-day stability or something surpassed gold's, which was the first time that had happened. So that was pretty interesting, right?
Yep.
And then, when everybody's, comfortable that we're not going anywhere, then of course they start.
Then it goes somewhere.
Right, exactly. And this is bullish. I mean, coming out of what we had this nice double bottom here, the triangle obviously ended up being a consolidation, which means that this is probably going to play off in a Wyckoff pattern. If people don't know what that is, they should look it up. But that just means that it's probably going to take another big leg up to the upside here soon. So I think for the most part, we're probably in buy the dip mode until further notice. It's just where those tops and those dips, the supports and resistance going to come in is going to be key for the kind of the shorter term traders. But I mean, if you're just a guy who bought a bunch of coins, $200, boy, you don't really have to worry about much right now.
Right. I love it. It gets me excited.
It's paying off.
Yeah, it gets me really excited. I love when Bitcoin is volatile like this, even on the downswing. To me, it's beautiful because like I was telling my boss today, we were talking about Bitcoin. He asked me all these questions about Bitcoin all the time because he calls me the guru at work. So awesome. Yeah, so I was telling him like it's such an unaltered market. I mean, yeah, there are market makers and there are people who have tons of money that can move the market, but sure, it's not really manipulated in the sense that, it's not government. There's not a lot of government intervention. It's just pure emotion driven, and it's beautiful. I love it. These things play out so much better, like these patterns that your expertise is in. It seems to play out a little more efficiently and just in a pure sense,
Yeah, they're definitely, the patterns are cleaner, and I think the market is cleaner in general. But that also has to do with the fact that Bitcoin has some commodity-like properties.
Yes.
You also get the supply and demand dynamic, which helps balance the emotion, hopefully. But, things overextend to upside and downside, like you said, and those can be great times for traders. But Bitcoin does react to supply and demand fluctuations well, and in fact probably even better than some of the commodities. In fact, we'll talk about some of the big commodities later in the show about how crazy they've been.
Yeah. Well, go ahead.
No, I was just going to say, so I think the market is reacting positively to what has been seen as good news. We have segregated witness well on the way, on time. A pull request was submitted earlier this week, I think. Steam Games and Media is apparently going to accept Bitcoin, and they're big globally. I know people have been clamoring that for years. The halving is coming up. So, I think there's a bunch of things the market is now just realizing, maybe Bitcoin is kind of undervalued at $400 given it was there 2 years ago when the fundamentals were half as good.
Yeah, and that's what I was thinking about today, actually. The halving for me seems like a big event that's on the horizon that could really drive the price. But I think I mentioned to you earlier, I was going to get your opinion on it. To what extent might the market be pricing that in now, and we could just see sort of flatness after the halving? And I think we may have touched on this before, but it just kind of still lingering in my head here.
Yeah, well, it's really tough to say what happens short term, right before and after the halving. I think my gut and the technicals, in my opinion, the charts say we continue to rally over the next maybe 4 to 6 weeks,
Mm.
going into this thing as people realize, boy, there really might be a supply shock. But you're going to have, at that point, you might, be up in the $600-700 range. I don't know. People have made a lot of profits. There'll be a lot of late buyers, and the effect of the halving might take a couple weeks or a couple months to really filter through all the way through the ecosystem. And so, and I've seen a bunch of traders on Twitter, and in fact, S3052, our other analyst, he recently said that he thinks there could be a top there too, kind of right around the halving, just a bloodbath kind of spike sell off to the downside, wash everybody out, and then we really start the kind of all-time high rally at the end of it.
Yeah, that's what I was thinking too. Well, I guess I was a little more on the side of we price it in now, and then it's a sort of flat, and then a big spike, but it also make a spike up. But
Right.
then what you're describing makes sense too, that you kind of get the FOMO and all the emotions that drive it up parabolic to crazy highs. Maybe not all-time highs, but then you're saying a big washout and then a spike?
Yeah. So, what if, let's say just if the charts play out like we think they will, let's say we're at, $700 about, at the, in June or so, around the halving.
Right.
You know, this last leg of the rally out of the triangle really started around $350-400, something like that.
Mm-hmm.
50% correction in a big bull market is not unheard of at all, and especially in a Bitcoin type market and a commodity market that can be illiquid in times of chaos. Boy, I think you could easily see a spike back down to 350, 400, where buyers reemerge and then push it back up. But if you're buying at 700 and then you see some candles down to $450, $400, you're probably scared, which you should be, because the market is it's supposed to be scary.
Yeah, that makes sense. That'll be something to keep an eye on as we get closer then.
Yeah, I don't necessarily know if the probabilities favor that outcome or not. It's certainly possible. I think, probably in the 20 to 30% range, which is good enough for a lot of traders to bet on. So we'll see. It could just be that the fundamentals are so good right now for Bitcoin that if you take half of the kind of continuous marketable supply of daily Bitcoins coming to market for miners offline, there might not be any room other than you're right. There might just be a big spike.
Yeah.
That has equal likelihood as the other one.
I agree.
Yeah. So, I mean, either way, I think this will be very interesting, because the first halving, the market was much smaller and not nearly as many people involved. And the first time of anything, you don't really know if it's legit or just a one-off. So, if we get the same kind of action, the same kind of technicals emerging around this time, then we can start to say, okay, well, each one of these halvings, we might be able to expect something like this, which is really helpful for technical analysts like us.
Yeah, well, I'm sure you'll keep us posted on how this thing is going to play out. You stay pretty much on top of it, so
yeah,
I'm curious to hear how this is going to go.
Me too. Well, for now, though, I think there's room to the upside. I think there won't be, again, the worst, most devastating corrections happen in roaring bull markets. A market that's up 30 or 40%, can pull back 50% within this kind of, within that range easily, and then just bounce from there and just keep washing people out. But, that's why it's nice for people that have gotten used to averaging into Bitcoin lower, for them to finally, see some benefit from it. And they can just say, okay, good. I can hold my coins, sleep good at night, at least for now.
Yeah, even over the past few days, it's been a nice feeling. Just like I returned to the days where I constantly checked the Bitcoin price, first or the last thing I do before I go to sleep, first thing I do when I wake up, just to see, okay, let's look at this action, what's going on.
Mm-hmm.
It's exhilarating, it's, without getting too caught up in it in terms of, I got to keep a cool head if I'm going to trade it, but I'm just talking about the excitement and the volatility that we saw, I guess when I first got into it about 3 years ago.
Yeah.
That's I feel that reignite in me.
Yeah. It's great. It really is. It's a great feeling, especially, when you see something you love so much doing well in any part of life. It's a kid or it's a friend or
right.
a spouse, whatever it is, or something you care about, it seems to be doing well, that makes you feel good. So, I think we all can reciprocate that.
Yeah, that's so true.
So speaking of feeling good and not feeling too good, Ether continues to go down. I mean, it actually hasn't broken those lows. So I think it was, the 16.5 low on this nice little kind of morning star candle here. They tried to bounce it back up, wash stops to 22, kind of like we thought we would, and now back down. So Bitfinex just announced that they're going to start doing margin trading on Ether tomorrow. I think I don't know, afternoon sometime, my time, I believe. But anyway, everybody's talking, what is this going to do? Are people going to, want to lever up long or short, or, what effect it's going to have? I think all things being equal, this probably isn't great for the price of Ether, because I feel like there's a lot of big traders who haven't really trusted Poloniex, who have wanted to short this thing and been waiting for a legit place to do it. And that, and it doesn't help that Bitcoin's going up. All the attention's on Bitcoin right now, and you could view them as competitors, certainly. So as Bitcoin goes up, that's more pressure on Ether to get out of Ether and into Bitcoin to catch that trade. So if they break those 16.5 lows, then you're looking at the 14, 15 area, where we ultimately think maybe you can find a viable bottom short term for a bounce. But we've talked about the economics many times.
Yep.
We don't think they're necessarily aligned or sustainable over the long term, as far as money is concerned, as far as being an actual monetary unit. So I think pressure is going to continue to remain. And if you're in Ether for the long term, I don't know.
Yeah, it might be some dark days.
I would be using it, unless you're using it to do what you need to do, build applications and, fuel whatever the programming that you're doing. I don't really know necessarily the details of how it works, but if you're using the gas for what it's intended for, sure, then then that you need it. But as far as again an investment, I see it as pretty risky at this point still, even at these levels, down 50% from the highs.
Yeah, I agree with Bitcoin. I guess the attention has been on Ether as of late, in the news, as a competition to Bitcoin, and like, oh, it's the new Bitcoin, and everybody, let's forget about the old Bitcoin. Now we latch onto Ether. So, there's obviously that sort of potential upside for Ether. But I think that came and went. And now we're still stuck with what's going on right here, and it could get pretty worse with the levered trades on Bitfinex.
Yeah. I mean, there's a lot of capital that just sits on that exchange that could be deployed shorting this thing to the downside. Not that we don't, we don't root for or against necessarily any coin except Bitcoin, but that's just due to because of ideological reasons. But it just looks heavy. I mean, look at this 4-hour chart. Look, I mean, that looks like a head and shoulders right there. That's nasty, right? That just looks like it wants to go lower. So I think that'll add some pressure there. The Bitfinex thing, and again, people need to realize that if they're probably not going to rally together, if Bitcoin goes, Ether is going to continue to sell off, regardless of what historical support and resistance really is, because there's not that much of it in Ether. We've been trending, just trading up here in these lofty levels that have never been explored before. So yeah, it's still dangerous in my opinion. So just something to watch out for. But if you want to get out there, people, and gamble with Ether tomorrow, then you can do it on Bitfinex. So anyway, we were talking about Bitcoin volatility and crypto volatility and kind of market volatility in general, which is a good lead into talking about some currency stuff, which is related to the crazy moves we've been seeing in commodities. Can you kind of tell us what's going on here?
Yeah, absolutely. Just want to point out I'm getting a little bit of feedback, so I'll keep hearing my voice in the background, throwing me off a bit.
All right, I'm going to mute for a sec. You go ahead, and then I'll pop back.
Sounds good. All right, so what I've been looking at lately is the sentiment on – sorry, let me do a screen share so you guys can see what I'm looking at. Here we go. Okay, so what I've been looking at lately is the sentiment on the dollar and how we've seen a real – almost like a pendulum shift from one side of the trade, the dollar trade, from one side, the bullish side, all the way over to like extreme bearish side. And how it's tending to play out, I'm seeing it, is that the dollar is starting to pull back just a bit. I mean, we looked at the last show. We saw that over the 30-year trend line, we're still sitting on top of that trend line. And so until that breaks, right. I don't think the dollar's going. Yeah. So I don't think the dollar's going anywhere until we break that trend line. But people aren't really looking at that. They're just looking at the sort of myopic view in the short term and seeing the dollar pull back a bit. And now all this money is rushing back into commodities, into emerging markets, and the dollar's only come down from its high of 100 to like 94, 93 and a half in terms of the dollar index. That's not a very big move.
Not a big correction yet.
Yeah, it's not a big correction at all. And, not to warrant the amount of money that is just rushing and gushing into oil, into emerging markets. Although I will say it's been interesting seeing oil maybe have found at least a short-term bottom around 40, I believe. It seems to be bouncing around 40. But this is all short-term because in the long run, I still think the dollar rises. And all this money being, rushed back into emerging markets to try to be the first to the game to get the biggest gain, it could ultimately blow up and make the situation even worse if the dollar continues its climb higher.
Right. So I'm wondering, if you have any opinion on why the base metals particularly have done so well. Like it's been like the kind of the useful commodities like the oil, the energy space, and then the base metal space like zinc, iron ore, copper, steel. Do you have any? Why is money flowing into those? Is that high?
So I think I may have lost you. You still there, Adam?
Yeah, sorry. Do you think that's hot money, or that's just pouring into those things just because they were the most beaten up?
Well, yeah, I do think it's hot money, but I also look at, people like to look at historical evidence and try to replay that in order to make some money. And during China's, meteoric rise, we saw huge rises in copper and steel, iron ore, things like that. What a lot of people don't really understand is a huge chunk, up to like $1.5 trillion worth of that price rise of sorry, let me try to hash this out. So there were $1.5 trillion in that global carry trade where people were borrowing dollars, euro, and yen to invest in China.
Okay, right.
$1.5 trillion of that was put into commodities for the sake of commodity collateralization.
That's what I wanted to get at. Yeah, for sure.
Yes. So these commodities that they were buying weren't going into infrastructure building. They were going into collateralization to secure to receive secure loans, securitized loans in China, right? There's a huge spread between.
They were just collateralizing these base metals in order to be able to take out more money, like in a credit line or
more money and smaller interest rates. the interest rate on an unsecured loan in China is just ridiculous. It's something like, around 14-15%, and you could get something like 5%, or maybe I'm exaggerating a bit, but it's really a huge spread between a secured loan and an unsecured loan. So you as an investor, you purchase a massive amount of copper, you import it into the warehouses, the XM warehouses, and then you pledge those commodities as collateral for loans, and then you invest it in businesses there. So not a lot of people understand that, especially your kind of retail investors. And so when they're buying copper, when they're buying iron ore, they think that this is a long-term move that's going into the infrastructure of China, and China is just continuing, its huge tread along a path of 6.5-7% growth, when really it's just hot money being invested, and can easily just shoot back out. And I think people, go ahead.
So do you think maybe a lot of these loans and stuff are securitized via these metals that were priced at much higher when these transactions were executed? So could it be kind of a crypto style pump and dump, where they get these things back to some kind of par value in their eyes, and then they can clean up the sheet and then get out and then be like, oh, okay, now we can let it crash?
Yeah, that's a really good observation. I wasn't even putting that together, but man, that makes a lot of sense to me as a pretty good possibility of what could be happening.
Right. Yeah.
As soon as sentiment starts to shift a bit in favor of these traders who are in bad positions, or these investors who are in bad spots, they kind of try to make themselves in a better position by running up the prices, and then they can get out safely, and everybody's who just came in is left holding the bag when it all falls.
Yeah, that's what I think. And also I think it's easier with these base metals because really, honestly, it's harder to trade these. Like, it's harder to find platforms where you can actually trade like zinc futures and copper futures and stuff. Like, they're not on most retail platforms. So, there's the liquidity is not as good. And so I feel like the big guys could shove these things around, take it on a parabolic ride like nobody's business pretty easily.
Right. And, and I'm not seeing a move in the dollar that's proportional to the move in these, metals. And that's why it tells me something's amiss there. Not that they should be, a 1-to-1 ratio, but it really should be somewhat, tracking each other inversely. So that's, unless there is global demand that makes sense, right? Global demand in the sense that the whole world is growing, or at least, big chunks like, China and South America, maybe they're really growing and they have a huge demand. That's a fundamental demand, not just a, trying to make an extra buck quick.
Right. So I'm curious, obviously if the dollar goes back up, if this just still is just part of this consolidation and it does start to rally again, that will take the base metals down. But this is kind of a good lead into gold and silver, because those might be a little bit different, right?
Yeah, I tend to agree with that. I think there's a higher than 50% chance that gold and the dollar rally at the same time, because if the dollar has a rip your face off rally, like I think could happen, you got to look at the currencies that are relative to the dollar, which is, obviously we're talking about every other currency, are going to get crushed, and gold and silver, specifically gold, but then silver tends to tag along. They are going to benefit from that.
Right.
So, so historically, I can sort of segue into gold and silver. It's a little off topic to what you're talking about right now, but I do think what's important right now is noticing that this is the gold to silver ratio, and this is basically for every 1 ounce of gold, the ratio is how many ounces of silver can 1 ounce of gold purchase. And, recently we've seen sort of a drop out of a trend line here. There's been a trend line going like this, and we've seen it sort of break down past that. And I'd like to see it come on down, and I think it will. And here's why. And this might be the first move up for gold and silver. And then, kind of while the dollar is still consolidating. And then when the dollar rips again, we could see silver and gold rip as well. So here's a chart.
That's kind of where I was wondering. Maybe you get this when the dollar starts to pick up steam again. Just kind of a reactionary trade. You get just a pullback, almost maybe just like a buyable pullback in gold and silver. As that's playing out, maybe it takes like a week or two or a month. Who knows? But it might just be like, oh, look, dollar's rallying now. Dump. The scared weak hands just kind of dump gold and silver, and other people use it as a buying opportunity. So that's just a little. I just wanted to say maybe that's something that traders might want to keep in mind. But yeah, sorry, keep going. I'd love to hear what we might rally together.
Yeah. So well, for gold and the dollar to rally together, it has to be a really, I think, a big event that brings a lot of fear into the market, which I think is a pretty big probability. In terms of what's out there, the economic data, the sort of divergence between funds. Yeah, the pension funds. Everything it just doesn't feel right. And I hate to base things off pure feeling. And I don't think I am. I'm just saying, like, when I say it doesn't feel right, like the information I'm taking in doesn't really align with the prices we're seeing in, the stock markets. It definitely looks to me like the bond markets are starting to respond with, not just negative interest rates implemented by the governments, the central banks, which are basically the same thing. But anyways, but the people's demand for the bonds, they're kind of it's a safe haven. People are they're skeptical right now. They're skittish about getting into the markets because they don't trust the S&P rally and things like that. So, I'm looking for gold and the dollar to rally together, and then gold to continue after the dollar's rise comes back down. And so what we're looking at in front of me right now, though, this is a more short to intermediate term. While the dollar is consolidating and gold and silver are starting to get attention, there's been a pretty good correlation here with gold and silver. And let me show this chart first, actually. Oh, that's not the right chart. Let's see. I'll come back to this one because this one should come after this guy. So I think I shared this chart in the Slack, the BBA Slack.
Yeah, that's right.
Yeah, so we've had kind of a downward trend, price trend here, and then I think we've finally seen a head and shoulders bottom, and we broke through this downtrend. We created the right shoulder over here, and here we go. We broke the neckline, and I think we're going to continue a rise so that this silver ratio or the gold to silver ratio can catch up to more makes sense levels, if that makes any sense.
So it'll outperform relative to gold. That's what you're.
Yeah. So let me go back to the other chart. I think in the short term, the very short term, yes. But then they kind of start to go up together. Because look, right here we have a pretty big divergence between the two prices. We've got silver down here. We got gold up here. And I think a good target for silver in the short term is $20, which is behind this gold price right here. You can't really see it.
Yeah, that's a good.
Yeah, so I'd like to see those two come together, closely together. And, I'm curious to see how that plays out, but that's where I think the probabilities lie.
Yeah, that looks good. That's an interesting chart right there. So just to get back in line with historical norms, that's why, and up until now, we have seen silver outperform like massively, I think. Gold's kind of been stuck, around 1250, 1240 for a while silver's ripped up through 17. So I think it's narrowing the gap, but as you can see by that chart, it's not there yet. So that's interesting. That's more alpha, up to $20, while maybe gold gets up to 1,300 in the same amount of time.
That's exactly what I'm feeling. Yeah, I think we can see gold at 1,300 and then silver at 20 in the next couple of months, and then maybe they start to really couple together.
Yeah.
Although I do think gold has more upside because the deep pockets that are skeptical of the financial system, they love gold, and I think they'll be more apt to buy gold. But as gold goes up, then the smaller pockets, they go for the silver because there's more potential uprise. Also,
right. So at the beginning and ends of the trend of the major trends, you get silver outperforming, but in the meat of it, you get gold.
That's exactly right. That's exactly right.
Yeah, and actually, that it does make sense just from an economics perspective. Just because if you're really rich, you certainly don't want cases of silver laying around. You'd much rather have just a couple cases of bars, to store your $10 or $20 million rather than a whole warehouse full of silver.
Yeah,
So I
exactly.
think when those guys start getting involved, that's when gold can really shine. No pun intended.
No, but you're exactly right. I think that's exactly how we could see this play out. Is in the short term, silver starts to catch up while gold, kind of lags, and then we get the meat of the move in gold, and then silver catches up. So it's just sort of a step ladder, one at a time. Gold being first, right, and silver following behind.
Right, and then so I don't know if you want to tie this back into the dollar, but that's I kind of wanted to weave it kind of back through here, and so
sure,
obviously if there's dollar turbulence, I think at this point, it's more about turbulence than it maybe is about direction in these major currencies. If just like big gyrations in either direction are not going to be good, and so but that might be good for metals.
Yeah.
So you might that even if you get a big upside spike in the dollar or a downside spike, I think that's bad. As long as as long as things stay in some kind of range of normalcy in terms of volatility, then people probably aren't going to panic into metals too much past these resistance points. But if you start getting spikes and crazy forex moves, then people will get scared, and that's when you'll see those bigger moves.
Yeah, I agree. I don't think it matters which way the dollar goes. Gold and eventually silver will go up. I think there's a higher chance for like a massive move if the dollar goes down. Sort of like we saw as the fallout from 2009 when they started printing money. Gold just shot through the roof. So as the dollar lost its value, gold just goes way up. So I think there could be more upside, but I mean, that's relative to like both cases. I think there's a pretty good upside for gold and silver.
And let's not forget Bitcoin too.
Oh, absolutely. Bitcoin. I mean, it is sort of it feels so much like a totally different market. Bitcoin is just, not really correlated at all with anything else. But I think it could become that. If people start looking at gold, they start looking at silver, things start to go real bad, and gold and silver start to get confiscated. I mean, yeah, these are like really fear-based type scenarios, but they're not out of the question,
No, not at all. That's why reasonable people own these things.
Okay, exactly.
And over time, hundreds of years, they maintain their value. And that's kind of the whole point of that thing. Speculating on short-term moves is one thing, but if you're really rich, you just hold a bunch of gold and silver, that's really not for you. You want to make sure that money still has value in 200 years when your great grandkids have it. That's what I think.
Yeah, no, I agree. And also, if you've got that much gold sitting around, how the hell are you going to move it? What if you need to uproot and get out of Dodge? How are you going to ship all that gold? It's going to be real hard. To me, Bitcoin makes so much sense on that level. Especially I just saw
that's where the 1% kind of, if people convert 1% or 2% or 5% of their gold holdings into Bitcoin, then you'd see these massive rallies. Well, I certainly could see that if people wanted to just take a small portion of that gold wealth, transfer it into something else that is gold-like and scarce and commodity-like, but that's much easier to transport in case of an emergency. So just that little amount of money would just send Bitcoin to the moon.
Yeah, I totally can see that happening. Like, it's not even, I don't think it's a far cry at all. I just saw that the U.S. just raised the expatriation tax another 422%, I believe it was. So we're talking about 844% rise in the tax to expatriate from the U.S. in just like the past year and a half.
They want to lock people in here, baby.
Yeah, they want to lock you in. So what's going to happen? People are going to be trying to figure out ways to get out. Well, if you put your money in Bitcoin, it's just as simple as a click of a button. So, I think that's that's something that could play into Bitcoin's favor in the near future too.
Yeah, no doubt about it. And that, I think perhaps because we've seen this rise in gold and silver, maybe we can draw some minor correlation there and say, oh, maybe that's another thing that's being priced in here with Bitcoin, with all the other good stuff, is that it is being viewed as more of a store of value like those other things. And it is talked about more in that sense in the media and stuff.
Yeah, I mean, that article you mentioned, that's a huge publicity feature for Bitcoin to be, that to have a characteristic that it's better than gold in terms of volatility lately.
Right. Right.
Until now, which is even better than gold if the price is going up. So.
Yeah, absolutely. And I think it could something just struck me was that, kind of the potential user basis for something like Bitcoin versus something like Ethereum or Ether, to where it's kind of a niche thing with Ether. People would view Bitcoin as niche, certainly, but potentially, there's not a ton of people coding and writing decentralized apps and programs, or who know this language and know this space well enough to really know what's going on there. Whereas, if Bitcoin is viewed as digital gold or as a store of value, everybody wants that. You don't have to be a computer programmer to want to protect your money. That's something everybody understands. So I think the potential user bases there are huge. So I like the way that they're taking the argument. I mean, the kind of splitting the sides, so to speak. Bitcoin, sure, money, and if you want to go take, whatever it is, BitShares or Ethereum or Counterparty and whatever, and do what they're doing with the programming stuff and smart contracts and all, hey, that's great. But I just think there's a small that's more niche than Bitcoin even.
Yep. Yeah, I totally agree. And it took me a while to realize that, but I'm finally there, and it feels good.
Right. Well, yeah, I think we're all happy to be in Bitcoin right now. It looks like it wants to kind of stay up here above 450, which is a good sign for the bulls. So we'll probably end it there. But thanks for coming on, Rich. My birthday is tomorrow, so
yeah, I was gonna tell everyone to make sure they tell you happy birthday. So happy birthday, Adam, and we look forward to talking with you in a couple weeks.
Thanks, man. I appreciate it. Yeah, we'll talk to you soon. Cheers, buddy.
All right, cheers.